January is now here. I'm not sure when this podcast episode's going to drop, whether January or February. Well, what kind of things should our listeners be putting into practice? I like looking backwards at last year. Hey, how much do we earn? How much do we end up paying? Right. So knowing our
Yep.
numbers, but then looking at our pay stub if we are W-2 and saying, like you mentioned, do we need to go back to that W-4 and change some things?
Absolutely. So this is exactly, I was thinking about this for a recent client who just had a big sale
Mhm.
last year in their company stock. So they're going to have a really big tax year for 2025. When you have a really big tax year that's not normal for you, you don't necessarily want to use the estimated payments that are created off that
A good
tax return,
benchmark, right?
because you're not going to have that much income
Mhm.
again next year, right? So then this year we probably want to do with the 90% mark of this
Right.
year's income versus the 110 of last year's. So part of it is just know your
The
situation,
other thing too, and we talk
right?
about this with clients, is like know your situation along the way. Go check in June. Go check in September, where you could pull your pay stub. How much have I been withholding? What am I on track for? And am I in the ballpark, in the vicinity? And if not, that's where we make those adjustments there and now rather than in December.
Absolutely. Another little caveat that I just remembered for this particular instance. What we've been talking about for estimated payments so far is, hey, you either get to do 110% of
Right.
income this year of last year's or 90% of this year's if you are, above that 150,000 mark. Well, in California, they have this special rule where if you're a joint filer and you make more than $1 million in a year, you need to pay 90% by the deadline, dead stop. You don't get to choose anymore, right? And then if you make $500,000 and you're single, same thing. So just know that there are specific rules, that we're speaking in some generalities here. And there are specific rules per state, and per all those things that you want to go look into with your accountant and your advisor to make sure that you're really taking care of
Yeah.
this.
And with the quarterly estimated tax payments, they're kind of wonky if you've never paid them before. Where the
Yeah.
first one is due in April, right? Tax deadline. And then you have June, and they're all on the 15th, but then, September and then
Mhm.
January for the following year, but it's due for quarter four. And if you're not
Right.
careful, you could feel like you're paying a lot because no sooner do you get done if you owed for your prior year, do you then on April 15th have your first quarterly payment? And then you would think they'd be spaced out evenly, but then June's just 2 months away and you have it again. And so understanding
Yeah.
how do we cash flow this as well and make sure that system's in place.